I get it right. And I think you look at the newly enacted 5-year plan in China. You know, China does, they actually do things strategically. You guys on the strategy session should become more Chinese, because they're the only economy in the world that actually understands the word strategy. They've enacted a new 5-year plan, the 12th 5-year plan. It's got all the right stuff in terms of shifting to consumption. And you're right, I've been talking about this for a long time, and I was definitely early and probably wrong to talk about it as early as I did, but the crisis is their wake-up call. They now know, courtesy of 08 and 09 and its aftermath, that the external demand driven by consumers such as those in this country is just not going to cut it anymore. So they've got to go to their own consumption sector, which has been on the outside looking in for as long as you can think of.
Stephen, as that happens, what happens to this repatriation of all the dollars, all the yuan that they move into the U.S. or they move into Europe? Are we going to see a major shift as this becomes a more China-centric?
You got it, Gary. I mean, that's the big deal, because the export-led model that China has right now is a recipe for trade surpluses, current account surpluses, and massive accumulation of foreign exchange reserves, 2/3 of which has to be reinvested in dollar-based assets. And that's what keeps them alive as the biggest foreign buyer of U.S. Treasuries. As they boost internal consumption, their domestic savings goes down, so does their foreign exchange accumulation. And guess what? They don't need, and they stop buying dollar-based assets, not because they're mad at us, not because they're disappointed with the way that we manage our fiscal finances, but just because they don't need to do it. And who's going to fund us?
Well, that's the question. So then their rebound, what they start to spark the global economy, by consuming, results in higher interest rates here, ultimately, if you're right?
Higher interest rates and/or a weaker dollar, and we're not going to be able to fund ourselves on the terms that we have been funding ourselves externally. That's the difference between us and Japan, by the way. We have similar types of problems, but Japan could fund itself internally. We can't. We don't save.
They become less of a buyer of U.S. credit, but do they actually become an outright seller for the trillion that they hold?
No.
Credit, but do they actually become an outright seller for the trillion that they hold?
No, only you know, the sort of fat tail event is if we impose trade sanctions on them, and yeah, then they'll turn around. And
so they just let that portfolio mature and run off, but they just become a net non-buyer.
They will be accumulating less foreign exchange reserves and have less demand for dollar-based assets.
Stephen, thank you.